Hi, this is Roger Balzer of Balzer Wealth Management. Welcome to our 2-Minute Tuesday for January 8th of 2019. The title for this week is Good Signs. If you've been watching my videos for any length of time, you're no doubt familiar with the New York Stock Exchange HiLo Index. This is one of the best short-term indicators for the equities market. At least it's one of the best ones that I've found. It has a great track record after reversals from extremely low levels. Since a high-low index has once again reversed back into a column of X's, remember, a column of X's means that demand is coming back into control. The New York Stock Exchange high-low index is reversed from washed out territory below 10%. Today I want to revisit this topic and bring you up to date on the latest developments in this front. The high-low index measures the percentage of stocks making new 52-week highs versus the total number of stocks making either new 52-week lows or highs. For example, if there is a day when 50 stocks hit new yearly highs while 300 stocks make new lows, the daily reading is 14.3%, which is 50 divided by 350. Once I have this figure, I then smooth out the readings by keeping a 10-day moving average, simply adding the last 10-day daily readings together and then dividing it by 10 for a simple average. This creates the reading that is charted every day on the high-low index. Now that you know how to calculate it, let's move on to take a look at where it is today. What you're looking at right now is the New York Stock Exchange high-low indicator. Keep in mind it's a short-term indicator, so it can and will and does move around very quickly, kind of like to think of it as a speedboat. Having said that, historically it can stay at extremely low levels or high levels for some length of time. At the market's peak in September of 2018, it was sitting at 76%. Since then, the indicator has taken two separate trips below the 10% level, with the first trip happening October 15th. The New York Stock Exchange high-low continued to move lower and eventually fell to 6% before reversing back up into X's on November 5th. After this reversal, it moved to 34. However, on December 18th, it once again fell back below the 10% level, where it ultimately reached a 2% level. As a result of Friday's market session, the New York Stock Exchange high-low is reversed back up in indexes to what is sitting at about 8% right now. What makes these moves unusual is that while I see the index fall below 30%, which is what I call the green zone, fairly regularly, I don't often see it move below 10%. I like to make a distinction between the two by saying a move below 30% is an oversold market, while a move below 10% is a washed out market. Including these two most recent trips below 10%, we've only seen the high-low index move below 10% 25 times since 1980. That's when I graduated from high school. That's only 25 times in 39 years, averaging roughly 2 occurrences every 3 years. But over the last 2 months, we've seen dips below 10% twice. The table you're looking at right now shows us each time period when the New York Stock Exchange high-low index hit 10%, and the ensuing reversals up. The first observation that stands out to me is when this indicator reverses up from low levels, more often than not, it rarely fails and it moves to a new low. Reversals up from below the 10% level have been a very good signal to re-enter the market with new positions. This chart shows the last 25 times the high-low index has fallen below 10%, followed by the eventual low reading, and then when it reversed to the upside. I should mention that at such low levels, all it takes for a reversal is for stocks to stop hitting new lows. That's exactly what occurred last Friday that caused the indicator to reverse into a column of X's, showing that short-term demand is taking control. Looking at the table above, another observation, perhaps more foretelling, is that you don't often lose much in waiting for the New York Stock Exchange high-low to reverse up from low levels. Remember, it doesn't take a great rally to reverse the high-low up. Simply takes a series of trading sessions where we begin seeing stocks hold above their 52-week lows overall. When I see the New York Stock Exchange high-low reverse up from below 10%, it's not because a horde of names are punching through to new highs. It's because sellers just aren't able to take stocks to new lows. This can be a great heads up for those willing to watch something other than the closing price on the Dow or the S&P. It gives us some insight into what's going on with the stocks that really have been impacting Mr. and Mrs. Jones' portfolio. The stocks that are continually hitting new lows are a constant drain on their portfolios. And when they no longer move below their previous low water mark, tells me something is changing in the market. And the change is for the better. So now that the New York Stock Exchange high-low is reversed into X's from below 10%, is it time to put new money to work? The short answer is yes, I believe so. Reversals in this indicator from low levels have historically presented good buying opportunities. I use this reversal as an initial sign of a near-term bottom. There are still some negatives for the market, so the reversal in the New York Stock Exchange high-low does not mean we are out of the woods just yet. In closing, I've seen the New York Stock Exchange bullish percent reverse up into X's from low field position, so the indicators are improving. We have just seen recent confirmation or further confirmation that the market may be turning around as a reversal in the New York Stock Exchange bullish percent from levels below 30% has also happened just yesterday. As always, please feel free to subscribe and share this information with anyone you feel could benefit from it. As always, remember that any of the securities mentioned in this video are not a recommendation to buy or sell, and they also do not represent specific recommendations of Balzer Wealth Management, LLC. If you're relying on a video for investment advice, you're making a big mistake. Please consult with your investment advisor before you make a decision to buy or sell any investment. And if you don't have an investment advisor, I encourage you to contact me at 440-934-3114 or shoot me an email, roger@balzerwealth.com. Make it a great week.